Hey, how's it going? Welcome back. My name is Alexander. Welcome back to The Conservative Investor, where I'm going to show you how to manage your money, manage your wealth, and grow your wealth using predominantly the stock market. I have 90% of my investments are in stocks of my savings. Doubled my money last year in stocks, 90% in stocks, probably 30 to 40 different companies I invest in. And I want to show you how to do that safely. It takes a lot of research, but stay on top of it together. And once again, this is just advice. This is just an opinion. This is not professional advice. I'm not a professional financial advisor. This is just an opinion. If you want professional advice, go seek a professional. All right, so talk about a few updates today. Looking at the freaking Wall Street Journal lately. This is the Friday edition, this past Friday. Start off with basic. If you never picked up a Wall Street Journal, top of the page, Dow Jones, NASDAQ, oil, gold, euro, yen, shows you where all these prices finish for the day. Dow Jones, NASDAQ, all this is macro data. How is the economy doing in general? Oil is interesting because if it's a pretty easy way to tell if the economy is doing well. If oil prices are going high, the economy is going to tank because everything runs on oil, just the way it is. If gold prices are running high, that could mean a lot of things, actually. It can kind of go high if its economy is doing well or not so well. If people are anxious about the economy, gold prices will spike. But they'll rise steadily, I would say, when the economy is doing well, because gold is not just for jewelry. One reason why it goes up when the economy is doing well, but it's used in freaking technology. Gold is a superconductor. It's a very good conductor of electricity. So gold is used in circuitry. It's used in semiconductors and microchips and all kinds of stuff. Micro. So that's macro information. Keep looking down. That's the top. I look on the sides here. You get some micro information, micro data. What I'm interested in, NVIDIA. NVIDIA just struck a licensing deal with a new company for some AI programs, AI programming. So people talk about potentially an AI bubble. It's only a bubble for people that are invested in bad companies. When the dot-com bubble happened, when the internet was first growing rapidly between the late 90s, early 2000s, there were a lot of losers there because people were investing in companies that were not strong. But we still have the internet today, don't we? And I think we're still going to have AI in the next 20 to 30 years. Still definitely have microchips. So NVIDIA, I'm happy to see, and I'm invested in them. They're still doing well. Look at another bit of macro news. Pressure rising in big U.S. oil field. I'm going to give you the spark notes on this. Basically, it's getting dirtier, more expensive, and harder to extract oil from one of the biggest oil fields in the U.S., where we get like 60% of our oil, I think it says. And this is just another macro condition to look out for. It's like if oil is an issue, we're going to have to get energy from somewhere else. Either we're going to be starting another war somewhere, toppling a foreign government to get oil, or seizing cargo ships off Venezuela, or investing in nuclear reactors. Here's more of that micro news. NVIDIA licensing startup Grok for AI technology. That's awesome. Happy for them. Some more little snippets of news before we get to the big meat. So some more military stuff. Israel warning to strike Iran again. For me, it's interesting because I invest in an Israeli drone company called Elbit Systems. They don't just do drones. I think they also do the Iron Fist system, Iron Dome system. There's their missile defense systems. Again, you don't have to invest in this. So you have moral issues with it. I think military stuff is cool, so I invest in tanks and nuclear submarines and jet planes and all that stuff. Kind of goes back to what I was talking about in my previous videos. When you're first getting started with investing, find at least one type of company, one sector that really interests you. For me, it's military stuff and precious metals like gold and copper and mining and stuff like that. Whatever gets you interested so you can be on top of the research on a regular basis. So there's some military stuff. There's a buildup of military tensions in, where was this? Buildup of military tensions between India and China. They're always having problems. They've got a border, so that's an issue. Pentagon warning about Chinese military strength. No kidding. So if you invest in military stuff like myself, that's interesting to know about. I invest in General Dynamics. They built the M1 Abrams tank. They build all of our nuclear submarines. So that's good to know. And semiconductors as well. I mean, semis and military go hand in hand. What do you think is the technology that's running those nuclear subs and those tanks and planes and automobiles and everything else? It's all semiconductors, and pretty soon AI in those microchips as well. Now we're going to get to a pretty interesting article here. Okay, broad energy trade can't last forever. So we're going to get into adjacent industries. What do I mean by that? If you want to invest in the AI boom or a tech boom, you don't just have to invest in that tech. If you want to invest in AI, you don't just have to invest in Palantir or Oracle or these cloud computing programs, companies. You can invest one step down in the first physical aspect of that tech, the microchips, NVIDIA, AMD, Micron, Taiwan Semiconductor. You can invest in the companies making the chips. Take another step down. You can invest in the companies that are building the data centers that are using those chips. Caterpillar, I think, is one of them. Just construction companies that are building the centers, that run the chips, that use the software. Another step removed for another adjacent industry, power companies. And that's mostly what this article is about. Talking about the steep recent meteoric rise in stock price, share price of energy companies. Everything from traditional gas, oil, gas turbines, GE Vernova, to solar power companies and modular nuclear reactors. These data centers use stupid amounts of power. You could use a nuclear reactor to power them. So what's interesting about this, and what's a little interesting moment here, if I can find the freaking chart, is this chart here. Share price as a multiple of forward earnings. Okay. What does that mean? Share price as a multiple of forward earnings. Forward earnings as in money they haven't made yet. So these energy companies have signed contracts with companies that are building data centers, and AI companies that are pledging to build these data centers that will then need contracts with these power companies. This is one of the reasons why some people say we're in an AI bubble. This is the quote-unquote shaky ground. Because you have people making money off of things that don't exist yet. But, I mean, if you're really that worried, just think about how often you use AI. When was the last time you used ChatGPT or an AI-assisted search? AI-assisted search engines are pretty much just par for the course. They're in everything now. You see the Waymos and robo-taxis. Honestly, more Waymo. Anything autonomous, it's in everything. And sorry, I have a lot of tangents, but there's a lot in my head. It's been a long day. Anduril. If you ever heard of Anduril, yes, Lord of the Rings. For you Lord of the Rings nerds out there, if you know what Anduril and Palantir and Palantiri are, feel free to comment below. But those are some of the hottest AI companies out there right now. And Anduril is not a public company yet. They don't have an IPO. They don't have an initial public offering yet. It's not publicly traded. It's a private stock. But nonetheless, they're working with, I think, L3Harris to build, AI-guided missiles for the Taiwanese military to help defend against China. And that's the kind of stuff you got to stay on top of, which watching the news, keeping in touch with YouTube channels, stay on top of that stuff. So, what do I think when I see this chart? What I think is, so Bloom Energy, 90 times overinflated, basically, their forward earnings. My question is, how strong is Bloom Energy? Is it a strong company? Look at their financials. Do they have a lot of debt? Are they a profitable company? What's their net profit margins? What's their current revenue past 5 quarters, 10 quarters, 5 years? And what companies does Bloom Energy have contracts with? And are those companies on shaky ground? Are they making deals with Oracle, with NVIDIA? Who are they working with? And are those reputable companies? That's what you have to do your research on. Now, like with anything, buy the dip. So if, for instance, like what I'm interested in is GE Vernova and Camco. I think Camco, whichever one is the nuclear reactor. I think Camco does modular nuclear reactors. Camco and GE Vernova. If they're strong companies and they're making contracts with strong companies that have real tangible assets and tangible goals that they're working on and making headway on, then when the dip comes, because those stock prices will fall, and you can buy. Talking about adjacent businesses, how do power plants work? How do you make electricity? I was talking in my last video about a copper mining company. If you want to invest in AI, invest in copper mining. How do you make electricity? It's copper wire spinning around each other to make a magnetic field. So you need copper to run the power plants. You need copper to run the power plants that are powering the data centers, that are using the microchips, that are running the AI technology. So you can input yourself and buy shares of any company anywhere along this line. Okay. Last freaking thing, I swear to God. More research out in the field. So I'm at HEB, Celsius brands. So hot right now. They had a meteoric rise recently and then they had a fall. Anyway, well, getting ahead of myself. I'm at HEB and it's empty. They're selling out. They're frickin' selling out. I was watching Theo Von podcast earlier today, this past weekend, Theo Von, chilling with Matthew McConaughey and all this stuff, and drinking Celsius. Celsius all over the place. If you ever heard of this YouTube show, Good Mythical Morning, Rhett and Link, GMM, they've had some plugs for Celsius. They all do. Now, this brings me to something really interesting that I love looking at. This guy right here. So if you saw my last video, this shouldn't freak you out. If this freaks you out, watch my last video. And we go over it. This is in Fidelity Active Trader Pro. You can download this program if you have Fidelity. If you don't, you can follow along on Google and just download the charts. Just search the ticker symbol and you can follow along. Type the ticker symbol CELH, hit chart. It'll bring up the stock price. Make sure to change your time frame to at least 3 months to a year, 3 months or so. I'm at 6 months here. And then drop down indicators, drop down bar on the right, indicators. You can input your simple moving averages. I have my moving averages, 200 day, 50 day, 20 day, and 10 day. And in the middle here, before you get to the bottom, you have trading volume. Red is selling, green is buying. And on the bottom is the RSI, which, as I mentioned before in other videos, if it's going up towards 70, it's overbought. Everyone owns the stock. Chances are it's going to drop soon. If it's towards the bottom near 30, if it's a strong company and is doing well, pretty soon it's probably going to pop back up. This is why we do all the research. It all comes together right here with this chart. See that big dip right there? That big gap, actually, not the dip. You can have a dip without a gap. That gap right there, 80% of the time, those gaps close. A good friend of mine, Raf, who taught me a lot about stocks, told me that, and I've been able to confirm that in my own research. But most of the time, those gaps close. So this stock price, what was that at? Right before that gap, it was closing at $59. We're currently in the mid to low 40s. So it should jump up to at least 59 eventually. So considering how popular it is in the media and the news, hell, Theo Von likes it. It's selling out at HEB, Central Market. And my other indicator here, see how all of these moving averages are starting to converge? The blue, green, purple, red lines, all these lines here, the 20-day, 10-day, 50-day, 200-day, they're slowly starting to converge. When your moving averages start to converge, that usually means that your stock price is about to shoot up or down, one direction or the other. Considering that we have a big gap that needs to be closed, all the moving averages are starting to converge. The company and the beverage itself is popular. It's probably going to shoot up. So if you were trading stock options, this is where you put your, I think it's a call, put, call, I don't know, I don't do stock options. But that's where you can make a stupid amount of money. For me, that's a little risky for me. I might just buy a little more right now. But yeah, that's my update for today. And thank you. Have a good night. Catch you next time.